Hello, everybody. Um, Welcome. Just kind of wanted to, this is our weekly housing market update for Southern California. I know a lot of you have been kind of asking for this on a more regular basis. So we decided to do this weekly, mainly because it seems like the numbers and everything are changing on a weekly basis. As usual, I have some slides. I have some updated statistics for you. And these are things that we compile internally, so we don't get these from anybody else. That's why they're based on Orange County and Los Angeles County data combined. And then we go ahead and we actually divide our stats up between over $1 million and then under $1 million, because I feel like those are very different markets for a lot of reasons. And in fact, especially this week, you're going to see why these are different markets. One of the other things too that I want to talk about is a lot of people are asking me, what do I think is going to happen? And it's really important to understand that the nature of these statistics is there's really three types of numbers that you look at. So there are things called trailing indicators. And a trailing indicator is exactly what it sounds like. It tells you about what's already happened. So for example, closed sales is a trailing indicator for the number of new escrows about 30 days ago. So trailing indicators tell you about what's already happened. Present indicators are pretty close in time. They're telling you about what's happening right now. So new listings on the market this week is a present indicator, right? I can tell you how much inventory is there. It's something I can measure right now, and I can tell you exactly what the present inventory level is. And then the real big one that we like is leading indicators. And unfortunately, those are the hardest ones to come by. And those are things that tell you about something else that's going to happen before it happens. So a good example of a leading indicator in real estate is new escrows, right? This week's new escrows, if they're up 50%, that's going to tell me, well, guess what? In about 30 days, closings are going to be up by about 50%, because pending sales are a really good leading indicator of future closed sales. Unfortunately, we don't have a very good leading indicator for prices. Some people think that absorption rate is a good leading indicator, but it can be sometimes. And we're going to go over that this week. I put in the title here that things are changing. And while we've had a fairly steady kind of set of stats for the last few weeks, that is not the case this week. We've got definitely some movements on our metrics. And without further ado, I'm going to kind of jump into it, because I know most of you, it's Monday and you probably don't have a huge amount of time. So we're going to jump into these real quick. So this is our first slide. And if you look, we've kind of got this color coded by dates. And I know I mentioned this, but this is for Los Angeles and Orange counties. And we've divided it by under $1 million and over $1 million. So, our kind of baseline stats are sort of pre-stay-at-home order. That's in the blue. Then we've got our first week at stay-at-home order. Then we've got 2 weeks ago, and then we have in yellow and the most recent week of data, April 13th through April 20th today. That is indicated in the green, and we're looking at new listings, and something interesting has happened. In both the under $1 million category and the over $1 million category, we have seen movement upward. And I think that's kind of fascinating, because my expectation would have been that buyers would be more eager to get out there. But it looks like sellers might actually be taking the charge on this. We're still nowhere near our sort of pre-stay-at-home levels, which was over 1,700 new listings in a week. Right now, we're basically right around 1,200-ish or so for the under 1 million category. But it's interesting to see them decline for 2 weeks in a row and then kind of pull a hockey stick and start going the other direction. So to me, that is definitely noteworthy, and it happened in both price categories. So kind of some big news here. And then we're going to go to the next slide, which is the flip side of this, right? And the flip side of new listings is new escrows. So, and kind of a little bit of a different story here. A similar story, but not exactly the same. And I'll get to that in a minute. You do notice the same thing. Pre-corona, we had way more new escrows. Things slipped quite a bit in that first week of the stay-at-home. They slipped a little further a couple weeks back, but guess what? We are seeing a rebound in the number of new escrows. And again, that is happening in both price categories. So both the under $1 million market and the over $1 million market. And, I think that's an interesting trend. And in some ways, maybe it shouldn't be unexpected, right? I think we've gotten some good news on coronavirus in the last couple of weeks. The death rates are slowing. The rates of new cases are slowing, at least here in Southern California. And I think that's kind of maybe helping people realize that, this isn't going to be stay-at-home orders for 6 months, most likely, that it looks like things will get back to normal a little bit more quickly. Before I switch to the next slide, though, there's something I want to mention, and that is the next one is something called absorption rate. And absorption rate is really easy to calculate. It is the percentage of new escrows divided by the percentage of new listings. So it's like, how many of those new listings are we absorbing? Are we going into escrow at the same rate as new things are coming online? And typically this is not 100%. Because there are some houses that simply won't sell. We know this. They're overpriced. The people aren't serious about selling. So it's really never a 100% absorption rate, at least not in the long run, right? But what's interesting to track is this number over time. And that's what we're doing with our graphs. We're looking at that absorption rate over time. And some people, I'm going to flip it up here so we can discuss this. Some people believe that absorption rate is a leading indicator of prices, meaning, this is what you see before you see prices drop, is you see an absorption rate that goes down. And if you look, our over $1 million absorption rate is largely the same. It hasn't really changed very much, but something interesting is happening in our under $1 million category. And I mean, we've had a very steady, if you look on the graph, we've had a very steady, absorption rate. It's fallen, but only by minimal amounts. And this week we dropped nearly 10% on our absorption rate, which isn't alarm bells. It doesn't say the market stopped. In fact, new escrows actually went up, but it's saying they're not going up as fast as sellers are hitting the market. And some people wonder, is this going to lead to a price drop in the future? And I think the kind of the most sensible option, or sensible sort of statement on that, is maybe. And the reason why it's maybe is because it depends on a couple of factors, right? Factor number one is exactly what is the motivation level of sellers on average. So if a whole bunch of people are throwing their house on the market saying, if I get my price, I'll move, well, those sellers are going to be fairly inflexible in their pricing. So if they don't get their price, they'll just pull their house from the market. That will not have a deleterious effect on real estate prices. That will not result in lowering prices. However, if you now suddenly have people who are saying, nope, we're still showing houses, we got to get this thing sold, we got to move. Well, I don't know, maybe those sellers are different. Maybe they'll negotiate a little bit more. In fact, we're kind of thinking about doing a negotiation podcast here. So keep an eye out for that, because I think we might talk about that a little bit. I do kind of find it interesting that this over 1 million category seems a bit more stable for whatever reason. I don't know if it's, their new listings went up too. So it's not like they dropped in listings. They just didn't go up as much as that under $1 million category. Whether or not this is a look at sort of a leading indicator of future prices, we do know something about prices today. So we do have a present indicator for that. And that is this average new escrow list price, and kind of in a bit of contradictory information. Over 1 million is kind of an interesting category because that seems to jump around a bit. But in this under 1 million category, I don't know if it's visible on the graph that you guys have there, but our median list price for a house that went into escrow actually went up. It went back. It went back to our sort of our red line data. In fact, it's even a little bit better than that, which is sort of like, that's kind of shocking news for me. I wasn't really expecting that. So people were thinking that we were going to just have sort of a slow price decline. I think we were looking at just under 2% over the last month. That trend has also reversed. So I think the real proof is going to be in the pudding. And not to do this to you guys, but you're going to have to tune in next week if you want to find out what's happening in this little bit of a plot twist. I'm very curious to see what happens to that median price number in the next week. If we find that that number starts falling again, and if it falls by a bigger amount, well, guess what? That means that new inventory is really making a difference. However, if it does not fall very much, that means that, you know, this inventory is more like that other explanation where we might have sellers coming into the market who are not incredibly motivated to move that property, not incredibly motivated to be flexible in the pricing. And you know, that kind of brings me to something else I wanted to discuss a little bit, because, you know, I participate and I talk to a lot of agents, and this is probably going to piss them off when I say this, but, you know, a lot of agents seem to be falling under two camps with what they think is going to happen. And the first thing that they think that is going to happen, right, is they're saying strategy number one. Strategy one is, hey, things are good right now. Put your house on the market right now. Buyers are still strong. And by the way, if you don't put your house on the market now, in a couple months, all these people that have been holding off, they're going to all go on the market at once, and it's going to be a glut of inventory, and you're going to get a lower price. So you should put your house on the market now. And then the other kind of camp is that, well, you know, there's a lot of people that are holding off, right, on putting their house on the market, but a good portion of those people are planning on buying too. And there's a good portion of people who are holding off on buying. So while there might be this glut and rush of inventory, there might also be a rush of buyers. So if that happens, you know, supply and demand are in largely the same proportions, and that does not equal dropping prices. In fact, it equals a market that looks very similar to now. There's just a lot more people in it, and there's a lot more transactions happening. So, you know, as far as where I fall in this is the part that might piss some of my friends off that are other agents and my colleagues, and I respect these people up, but the reality is I think that there is not enough data for anybody to make a determination on that. So I think the best answer I can give somebody is, I don't know. And the even better answer than that is, I don't know which of those two we're going to see. So this really comes down to your individual situation. If there is a house you want to buy right now, you've seen it, by all means, we should put your house on the market right now. You don't want to waste that opportunity. But if it's something where you're not comfortable with people coming through your house for showings, don't. I don't think there's enough data to really predict either way what direction things are going to go. I know this goes against a lot of advice that agents should be certain all the time, but the reality is I have a background in economics. I'm trained in this, and I'm telling you, there's not really enough data to sort of make an actionable, oh, this will definitely happen this way. I couldn't even give you like a 2/3 chance. Right now, I'm personally evenly split on which direction it could go on our sort of glut of inventory theory, or our, well, there's going to be a lot of inventory, but there's going to be a lot of buyers who jump back in. And in fact, because we're looking at these escrow numbers where they are jumping, but not as much as the new listings, I don't know, you know, that could mean that some of these buyers are going to hold out later. And as a seller, you might even have a better relationship later on in time. So we will definitely have to see about that. Anyhow, post your questions down below. We're happy to answer them. We're happy to take calls, direct messages, emails, whatever you guys like. And we will see you again next week.